Hello everyone. In this video I will talk about the different kind of market participant in the financial market. There are mainly four type of market participant. One is arbitrager, second is a speculator, third is hedger, and fourth is market maker. Now let me explain you each market participant in detail. Arbitrager. Arbitrager are those market participants who exploit the difference in price of a same security on two different marketplaces. Few time or sometimes you might be seeing the difference in price of a particular stock on NSE and BSE, right? And you might be thinking that what if I will buy at NSE and sell at BSE? Yes, you can, but most of the time the difference in price is so low that you can't afford to swap these two positions. But sometime the difference is so large that you can be able to afford it, and that what exactly arbitrators do in reality. They buy a security at one marketplace, not necessarily NSE because it is in general. So at buy at one place and then sell at another marketplace, right? Now let's talk about the second market participant, which is a speculator. A speculator are those market participants which bet on a directional movement of a stocks, directional movement of a asset, right? So all the retail investors, not necessarily all the retail investors, but most of the retail investors bet on a directional movement of a stock. Like they buy a stock and then they want that these stocks will go higher in like coming 1 days, 2 days, and then they will sell it. If it go down, then they have to book a loss, right? So these kind of market participants are a speculator. Third is hedger. Hedger are those who hedge their current position. If you are a option seller or option buyer, then you might be aware of a strangle or a straddle. So all these strategies are hedged positions. I am giving you a real example in the market. Let's suppose you are okay. So let's take an example of Raymond. They buy a raw material from USA, just considering, and their CFO have to plan their finances for a whole year. They will estimate that okay, this amount of jute or like raw materials they need to import from USA, and for that this amount of finances they need, and accordingly they manage their finances. But all the raw materials they do not need right now, they need in a sequence of time. So let's say that they have budgeted around 200 crore, but in the future it might be possible that USD INR become 95 in place of 90. So these 5 rupees was not what they have predicted, they had like estimated. So these will be the higher cost that they have to bear. To hedge this case, they try to buy a future of USD INRs. So I am assuming that you know about the future, but if you do not, then you can see my other videos if available. In this way, Raymond will hedge their positions for the future fluctuation of the currency. Now let's talk about fourth, which is market maker. Market maker are those market participants who provide liquidity in the market. You might be heard of a name like IMC Trading, Floatrader, Citadel, Gen Street. All these players are providing liquidity in the market. How they do exactly? So consider that visualize the depth order. So let's suppose that there is a buyer and there is a seller. So what happens? Like so this is the bid and this is the ask, and let's suppose that for a particular stocks the ask is 12 rupees and bid is 10 rupees, and these 2 rupees is the friction because of which these trades are not being executed. What market makers do, market makers come into these 2 rupees and then put a like quote bid and ask in such a way that it will reduce the friction of both the for both the buyer and the sellers, and the difference between the bid and ask is what market makers actually make in reality. If you really want to understand depth about how these like market maker exploit these opportunity in the market, I am going to make a detailed video about it. You can watch. I will also put a link of the video in the descriptions. So these were the 4 market participants in the financial market. I hope you understand the video and also you get the little bit about what all market participants actually do and how you can differentiate between each market participants.